Good morning, 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 morning. What's up, everyone? I hope you're all doing well. Happy Tuesday to everyone. Back on the couch in my living room on with the plants in the back. I hope everyone's doing well today, and we got a decent bit to talk about. Right, yesterday we had a um, follow through to the downside, right? We accepted under a few distribution blocks, like we were saying. We wanted to see if we could hold 70.72, right? In the morning, it didn't. We can close above it. So naturally, right, there was more downside throughout the day. So overnight, we managed to break 38.40 on the S&P futures, which is a massive, massive distribution block start to the downside if you're looking at a volume profile. And remember, price wants to stay within larger volume blocks. So what this tells us, especially with yesterday close, we have CPI tomorrow. We had crappy bid. We had some news overnight, right? We got a euro parity with the dollar. We're going to talk about that. There is a lot of bearishness settling into the market. We got a bid in volatility after we came into the VIX 25 area. I want to see it a little lower, but I want to see the S&P a little higher, but there was no bid in the market. So, you know, I'm looking for general downside. We're going to talk about why. So, excuse me, geez. We had a very interesting downside naturally in the euro. There's a lot of stuff going on in the eurozone, but the downside in the euro, we're pretty much at parity with the dollar, right? Meaning a 1-to-1 relation US dollar to European dollar. And this is funny. I saw this morning that Heathrow is actually asking airlines to stop selling tickets because this is one of the biggest airports that gets a lot of traffic into Europe. So a lot of people are looking at this, especially Americans, as an opportunity to go and um, explore Europe, right? Europe is a huge, huge destination spot, especially in the summers. And we're seeing now with this parity, there's a lot more influx of potential European tourists. But the point being here is we're probably going to hit parity today or in the coming sessions, and we haven't yet. I haven't checked it I haven't checked it in like 30 minutes or so. So I don't 100% know if parity was hit. Let me just check this right now quickly with you guys. Typing it out on my computer. And I don't think it's been hit yet. I'm not gonna lie to you guys. I think it's at like, let me see, what is the low here? Oh no, it had been hit. So parity was hit, right? But what's happening? This could come at a cost naturally, right? Could at a cost of global economic stability, realistically, with this parity, because what we're seeing is the Federal Reserve, right? They're on track to hike 75 basis points in the coming meeting at the end of the month, right? With a small chance of 100 bips, right? The point, tame inflation. Naturally, in comparison, the ECB has been a lot more hesitant to get that aggressive in terms of rate hikes. So EU recession fears are more pronounced than they are in the US, especially given this grim energy outlook because Nord Stream 1, like we talked about yesterday, the pipeline is doing its annual maintenance, so it's going to shut down. Similar to the situation in Europe, we've seen that, I talked about this a few times, but we've seen that individual countries like the pigs like Italy and whatnot, the reinvestment risk in some of the bonds is starting to really weigh on them. So there are a lot of things that are shaping up while the ECB is very reluctant to get as aggressive in the rate hiking and quantitative tightening cycle, because that could shift a very quick turning point to the downside, right? And they have to engineer this a little more carefully than the Fed in the US. But again, the Fed has a big job on its hands. Now, we can compare this to another larger economy, right? Japan, giga dovish right now. They're so dovish. They want to keep things fairly stable, and what that's doing is putting the yen under pressure, and it's leading to a stronger wave of constant dollar buying in the forex markets. So the yen and the euro are by far the most traded currencies between, like, compared to the dollar, right, against the dollar, and they're both really weak. Which makes it harder for anything else to rival that US dollar, right? Which we're seeing continuous flows um, into that US dollar, right? It's not turning to the downside. Now, realistically, the Bank of Japan, if we compare this to Europe and the US, the Bank of Japan, they want to stick to its yield curve control policies, meaning that they're going to stay fairly dovish. I think the current levels of inflation are fairly transitory, right, as we've seen in the Fed, because they're still under the premise that it's kind of a post-COVID recovery, and we're going to see it kind of taper off. So they're not getting necessarily aggressive with with that rate hike cycle. So over in Europe, the ECB is now entertaining the thought of raising rates, but it's also fearful what that would do for peripheral yields in member states, right? Just like Italy. So with Italian bonds in a massive kerfuffle here, you can see like Portuguese, like Greece, like all of those nations that are in that pigs subsector, there is going to be a lot of fear in hiking rates based on those economies. They're not that strong necessarily. So on the other hand, the Fed not so scared. They're aggressive. They're going to keep going for it. Their economies are they're not hinged on multiple different states like in the Eurozone. Another thing here, Amazon Prime Day is coming up, and we have not only CPI data that's coming out tomorrow, which is going to be a huge event, expected to be 9% and even over, meaning that there's no tapering off in inflation, but we also have retail sales this week. So retail sales are going to be pretty interesting to watch because the retail sector, right, consumer spending, all of that is tied together. Now we have Prime Day. Right, Prime Day is going to be a 2-day event, 48 hours, July 12th to 13th. So we're starting today, and there's going to be, realistically, well, ideally, more spending in this discounted period. Now, there is naturally an expectation that it's not going to be as great as the past years. We haven't seen too much buzz around it. Consumer debt is at aggressively high areas. It doesn't seem, and of course, inflation, things are priced heavier. It doesn't seem that those numbers are going to be as good as the prior years. So again, JP Morgan expects that these 2 days are going to generate 3.8 billion in incremental revenue for the company, which would be a 7% increase from last year. So we'll see how that shapes up. The total Prime Day revenue is forecast to be up 5% to about $5.6 billion. So the firm, JP Morgan, is still bullish on Amazon's logistics side of the business and said that the overall macro backdrop and impact on consumer demand cannot be ignored. So we'll see how that shapes up. They're expecting somewhat of an increase, but I don't think those numbers are going to be that hot. We'll see naturally. It's at a period of compared to last year at this time, like the inflation was not as high naturally. Consumer debt was not as high. So people might be a little shyer to spend. Of course, it is the summer, so who knows, right? Anything could happen at this point. But that is one of the numbers that we do have to watch as well. It could lead us into more of a macro perspective of what's going on. So to wrap this up, we had some kind of downside in the overnight session. Let me just open up a chart here so I can talk to you guys about that. We had some downside in the overnight session. Actually, we broke down into the distribution block under 38.40. Now, 38.40 is a starting point, but the 38.45 is also going to be a massive, massive resistance point, with 38.52 to 54 being that like final threshold to really subdue this to the downside. But we start breaking and holding under 38.40, which is a big distribution block. Price is going to look for 37.96, right? We have the 38.20 to come through before that. That's a huge, huge area, 38.20 down to 38.18. But as long as we maintain under the 40 and we hold and we reoffer 40, the reality of it is we're probably going to be trading under 3,800 by the end of the day and possibly into the mid to higher 3,700s, which is something I'm going to be watching for. I think that today there's a lot of rally selling. Yesterday was a terrible bid on every bounce. And we talked about that like last week, where this false bid, right? We were just looking for a point where they just kind of started reoffering this market. I thought it would be a little higher, but this false bid was it was BS from a very evident area. So yesterday couldn't hold 70.72, which we talked about. No problem. Look to sell all the rallies. Now, same thing today. I want to see if these rallies could get sold, especially under that 40. I'm going to be watching that 40. I'm going to stop looking to short at 38.53, 54 in that area. But realistically, I think we're going to have more of a downside move on the day based on some of the news that we saw that I talked about, based on how the bid and offer set up in the last few days of this market. So having said that, it was a shorter update, I think. I hope everyone is doing well. I hope everyone had a good trade day yesterday. It was slower. Keep in mind that you don't want to overtrade this market, especially that we don't have that much volume leading up into a massive event pre-market tomorrow, which we're going to talk about in the morning market update, the CPI data. But realistically, like, keep the size small, keep the trading small. Don't overtrade this. I'm leaning a little more to the downside, looking for some swing position to the downside. I just missed that VIX long, the volatility long on some options, but that's okay. We'll see what shapes up into the end of the week, how this transpires, but there's underlying bearishness in a lot of places. So I hope everyone does really well today. I hope everyone is diligent with their process and their trading. And like Logan said, right, huge volume on yesterday on the 355 puts on the SPY, right, for the 22nd, which is in 10 days. So I've seen last week 367, I think it was 363 puts into the end of this month. The expectation is a potential push right into that Fed announcement to the downside, right? I thought we'd I thought we'd see that like a bit above 4K, 400 on the SPY. That was the area where it would have been very, very interesting to look for the shorts. But again, we always fall short of those levels. So I hope everyone has an amazing day today. Let's be super diligent. You don't want to overtrade this because realistically, you're probably not going to move that much until tomorrow, right? Selling premium at these higher volatility levels is a solid idea. Write some credit, put that shit in the bank. And realistically, let's get ready for tomorrow. Tomorrow is going to dictate a lot of the movement. Hope everyone enjoys. Happy Tuesday. And what else was I going to say? Check us out, community.tradeproacademy.com, our free Discord where we drop plans, and check our website out for our free master classes on futures and options. So I'll see you guys tomorrow. Enjoy the day. And yeah, chat with us in the community. Bye. Thanks, everyone. Appreciate it. I read the comments.